2026 is in the U.S. the midterm elections. And President Trump does not want to be a lame duck. It seems as though there's been reticence about actually buying Bitcoin for the strategic reserve. Original intent was to own 1 million Bitcoin. But the most important one is he does not want to be a lame duck. He wants to have another 1 or 2 productive years. And I think he sees crypto as a path to the future. So I think we're going to see massive growth.
Before we dive in, if you're here for the latest Bitcoin and crypto news, smash that like button, drop a comment, and subscribe. We bring you fresh updates every single day. Big news just dropped. Cathie Wood is now saying 2026 could be one of the most historic years in Bitcoin history. On the latest Bitcoin Brainstorm podcast, the Ark Invest CEO said President Donald Trump may actually start buying Bitcoin on the open market to build out the U.S. strategic Bitcoin reserve before the 2026 midterm elections. Wood pointed out that the original reserve was designed to hold up to 1 million BTC, but so far it's been stocked mostly with confiscated coins. She believes Trump wants to avoid being seen as a lame duck, and adding real market purchases could be a powerful political and economic signal. That's huge. If the U.S. starts actively accumulating Bitcoin, we're talking structural demand at a sovereign level, not just institutional flows. In a market with only 21 million BTC ever to exist, even incremental government buys could push prices sharply higher. Wood also tied this to broader macro tailwinds. Business-friendly tax cuts, pro-crypto regulation like de minimis exemptions, and growing political influence of the crypto community all give Trump more reasons to lean into Bitcoin. This narrative isn't just noise. It connects politics, national strategy, and market psychology. Bitcoin could stop being just an asset class and start being viewed as a real reserve currency alternative, forcing global reserve managers to reconsider their portfolios. Now let's roll the clips from Cathie's interview as she breaks down what this could mean for BTC and the entire crypto market.
In the early days of Bitcoin, or at least our early days, when Abby Johnson was mining Bitcoin in her office at Fidelity, and we were, marveling. And, a lot of people were working from home, and now the technology is evolving again. And the convergence, as you say, with solar technology, the convergences among technologies, which is where we're spending a lot of time now, these convergences are going to unleash incredible entrepreneurial expeditions, and I think AI as well in the loop here is going to be very important. 2026 is in the U.S. the midterm elections, and President Trump does not want to be a lame duck. So I have a feeling that he is going to work with his crypto and AI czar, right, to do a few things. One, make sure we get that de minimis ruling through. Make sure. So because, grassroots is where a lot of what we've been talking about is going to happen. But also, it seems as though there's been reticence about actually buying Bitcoin for the strategic reserve. So far, it's confiscated. The original intent was to own 1 million Bitcoin. So I actually think they will start buying, because I think this will help Trump in a couple of ways. The midterm elections, part of the reason he won the presidency, I think, was the crypto community. Yes. And another reason, of course, is his family is all in on Bitcoin and other crypto assets. And they have, we talked about the DATs earlier. They've kind of fallen apart this year. So I think he's got all kinds of reasons to do this. But the most important one is he does not want to be a lame duck. He wants to have another 1 or 2 productive years. And I think he sees crypto as a path to the future. The second thing that I think we'll see next year is a big surprise in GDP growth because of the OB3 and the corporate tax deductions. Like our corporate tax rate in the United States, the effective tax rate has dropped to 10%, which is the lowest in the world for any developed country. So I think and we have accelerated depreciation as the primary reason. You put a manufacturing facility in the U.S., think this about Bitcoin, about this Bitcoin miners. You put a manufacturing facility in the U.S., if you start building it by the end of 28, you in the first year of service will be able to depreciate it 100% in year one, not over 30 to 40 years. So you get huge tax refunds. So I think we're going to see massive growth, and the deficit, they're going to have more degrees of freedom in which to work now. I think a lot of people have been fearing a down cycle. We did hit 120,000, happened to coincide with the flash crash on 10/10. And so we're trying to sort out, okay, right now, is there a big whale out there that has not surfaced yet and is somehow related to the leverage that has been taken on in the last few years? We don't think so, but we do not think the probability is zero. So that's one thing. I think the other thing, and so we do have the question of 4-year cycle. Is this it? And was 80-ish thousand the low?
Across the globe, Bitcoin is moving from speculation to sovereign and institutional adoption. Governments are no longer just watching, they're acting. The United States has established a strategic Bitcoin reserve, holding BTC as a long-term national asset. Pakistan has announced plans for a national Bitcoin reserve, using seized Bitcoin and allocating surplus energy for mining. Countries like the UAE, Finland, and Venezuela are also retaining Bitcoin on government balance sheets, largely through enforcement and state-linked holdings. El Salvador remains the first mover, having adopted Bitcoin as legal tender and continuing to hold BTC as a treasury asset. Institutional demand, ETFs, and sovereign involvement are now the dominant forces. Bitcoin is no longer driven purely by retail speculation or having hype. This shift matters. As Bitcoin matures into a global macro asset, massive 70 to 80% drawdowns become less likely. Volatility still exists, but the floor is stronger. The takeaway is simple. Bitcoin is evolving into a strategic reserve asset. Governments are holding it. Institutions are allocating to it. This isn't the old cycle. It's a new phase of global adoption. Let's get back to more clip from the video.
And I know a lot of people are discouraged right now, especially with the DATs, and I actually think, and we were talking a little bit before we got on, that as a portfolio manager, I much prefer that we're in a period of doubt, and then picking up the pieces is what we all should be doing right now. So we'd like to see a test here. And if we can get by this year or this cycle with a 30+% drop instead of a 50, 60, 70% drop, that I think will be a victory and will be consistent with the lower volatility that has defined Bitcoin as time has gone on here. So that's the first thing. The second thing is, I actually said, and boy, Andrew Ross Sorkin ran with it when I said on CNBC Squawk Box one morning, well, it seems to me that stablecoins are usurping a role that we thought Bitcoin would play when we put out our first white paper in 2015. And that does seem to be the case. We do see a lot of activity, especially in emerging markets, focused on stablecoin. Stablecoins are serving as the insurance policy that we thought Bitcoin would provide to people in emerging markets as they were trying to protect themselves from confiscation of their wealth, whether it's in the form of inflation or just outright confiscation and capital controls and so forth. He ran with that, but I had to put that in context. That was everything else equal. Well, something else was going on, and that was the gold price moving up as rapidly and as much as it has during the past year. And so the digital gold role of Bitcoin, we think is that much more valuable and probably is more than offset what I just said about stablecoins. So I think we're sorting through that. And I think in terms of the future and next year, we have seen very little institutional buy-in. It is just beginning. And I think if we get the U.S., for example, not adding just confiscated Bitcoin to a strategic reserve, but out there buying, and we don't know if that's going to be the case, but if they were to do so, I have a feeling that would set off what we're all waiting for, which is, the scarcity value to reassert itself again now that we're near 20 million Bitcoin outstanding and we only have 1 more million to go. I think the party has just begun in that way. And so we're still very optimistic.